Hello everyone, welcome back to another episode. Today's video, I'm going to be doing multi-time frame analysis on US30. US30 is the Dow Jones Industrial Average, an index of the 30 major American companies, alright? It tracks these 30 major American companies. So today I'm going to be doing multi-time frame analysis from the weekly time frame to the lower time frame where the current price is. If you haven't subscribed to the channel, please go ahead and subscribe to the channel, because in this channel, I try to simplify things and make it as easy as I can so that even the new traders can understand what I'm teaching, all right? So join the community. Also join the free Telegram. The link is going to be in the description, all right? Without wasting much of your time, let's get into the video. All right, so here we have US30 on the weekly time frame. All right, so let me show you guys this, okay? Here we can see the price was basically creating high highs, high lows all the way around. And then over here, we had a change of character. All right, over here, we had a change of character. So a change of character basically means when the price makes a reversal from an uptrend to a downtrend, or from a downtrend to an uptrend. All right. So here we can see price was making higher highs, higher lows. Okay, higher lows and then higher highs. And then this is your last higher low led to higher high before the break of this structure there. All right. After this structure is broken, price basically created a lower low instead of creating a higher low, so that this demand zone here did not hold. The price cut through it, and then we ended up getting a change of character. All right, good. So we can see that after that, price created high, lower low, lower high, lower low, lower high. And if you can see, the price is respecting the supply zones. So this is how you know even US30 respects market structure. So here you have your supply zone after the break of this structure. Again, here you have your supply zone after the break of a structure, because this shadow needs to be mitigated. Mitigation means basically when the price leaves an imbalance and price has to go back to fulfill the imbalance. This is called mitigation. All right. So price has to go back and fill the rest of the orders before it drops to the downside. So you can see price respecting this supply zone there. And then we had another break of a structure, which is right here. So we have another break structure, which is right here. Price giving us that break of a structure. Okay. And then what happened after that is price created what do you call something, an inducement. All right. This demand, this supply did not hold, but price created this inducement. And then once the price took out this inducement basically is when the market makers or the institutions, when they create a fake move where a lot of people get trapped thinking that the price is going to continue to the downside, and then they go the other way around. All right. So price created this inducement, dropped, breaking this structure here. All right. Once the price broke this structure here, price went all the way up to fill the rest of the orders around this shadow here. Okay, there's a shadow here if you can see. So price went back to fill the rest of the orders on this shadow, and then continue to the downside, breaking this structure from this high to this lower low. Okay, so this was our last break of a structure before the reversal happened. All right, so here we can see that we have a change of character again. All right, this was your last lower high led to lower low, breaking this structure. So now price created a change of character or a reversal. All right, now we can see that we have a change of character. Now what I'm going to do is I'm going to go to the lower time frame, like the daily time frame. We're going to continue going all the way down until we see the current price and find out what is it doing. All right, so but when you're trading on the daily time frame, you can see that we have this change of character, and then price is basically creating lower highs, lower lows. All right, price is basically creating lower highs, lower lows. Price ended up respecting this supply zone here after the break of this structure. After the break of this structure here, price ended up creating this supply zone and creating this inducement. All right, or liquidity. All right, you can call it inducement, you can call it liquidity. It's all the same at the end of the day. Liquidity is basically when they taking the traders out of the market, and then inducement is when they induce or when they trick the traders to get into the market. All right, because if you can see, this was a clean supply zone, but for some weird reason this supply zone did not hold. Instead, it turned into a liquidity or inducement. All right, so price went all the way up, respecting this area here. All right, so we can see that this shadow of the candle from the from the open and the high of this candle is respected. So basically there is an empty shadow that needs to be mitigated. So mitigation means when there is orders that needs to be filled, the price has to leave this area and then price has to go back to fill the rest of the orders. All right, and that's what happened exactly. Why? Because we have this change of character on the higher time frame, so price is dropping to go find the next demand zone before it continues to the upside. So we can see here price respected this demand zone. And why I call this a demand zone is because price was basically on the daily time frame creating high, low, lower high, lower low, lower high, lower low, lower high, lower low. All right, so price started breaking this structure. So once the price broke this structure and broke this structure, it left this area of a demand zone, and we will find out why I call this area a demand zone. Let me go all the way down to the 4-hour time frame and show you guys that this is a demand zone. Go up. All right, so here you can see a clean demand zone. So that's why you have to look out for the shadows. The shadows give you information. When you look at the candlestick basically contains a low, open, high, and close. Okay, same as the downtrend, it tells you the same thing. So this is high, open, close, and low. Same thing. All right, so you can see that there's enough demand that's sitting over here. So price came back on the daily time frame, mitigated this area, and then continued to the upside. All right, when you look at the shadow basically tells you that there was the buyers, the sellers were in the market, and the buyers came in and they took the price to the upside, pushing the price, creating a demand. So they left some of their orders right here. So now those who missed taking the trade, or those who did not fill the rest of the orders, they have to wait for this price for a premium entry, and the price comes back to retest this zone before it continues to the upside. So now we can see that once the price tapped on this demand zone, what happened is price started creating a change of character. All right, so this lower high led to lower low, turned into a change of character. So basically a change of character again is when the price makes a reversal. We went from downtrend to an uptrend now. Okay, because price hit a higher time frame demand zone and reversed, creating a change of character. Sorry. All right, let me clean this up real quick. So we can see that, all right, this was your last lower high, led to low low, breaking this structure here, and then breaking this entire structure over here, and then price created a higher high because this supply zone did not hold. You can see there was a supply zone here, but this supply zone did not hold. So a lot of traders get tricked by entering here thinking the price was going to drop to the downside and targeting over here. But this is when they call it an inducement. All right, so when they create the inducement where they induce the traders to get into the trade, and then after that they take them out of the trade, turning this inducement into a liquidity. All right, because when you enter the trade here, you put your stop loss right here. What happened after that is the price continued creating high highs and then taking these entire orders that was executed here. All right, after that price went back to retest this lower time frame, which is on the daily time frame supply zone, and then reversed again. Why did it reverse? Because price broke this structure, so now it has to find the next demand zone before it continues to the upside. And we know that the price is a downtrend, is an uptrend on the higher time frame, on the weekly time frame. So that's why price now has to find this demand zone before it continues to the upside. So we can see that there is a clear demand zone right here. We can also see that there's another demand zone, which is right here on this shadow. So price might come reverse from here or might reverse from here. It's all about a game of probability. All right, no one knows 100%. You just have to have a clear concept of what's going on in the market. All right, so but nobody can tell you 100% this is what's going to happen. So this is a probability versus a possibility. All right, so you always have to know what you're doing, but you always have to have that back in your head that anything can happen in the market. All right, the market can change anytime, so that you have to change and shift with the market. All right, don't be hard-headed. Always shift with the market. If the market is doing something, listen to the market instead of listening to your own mind sometimes. All right, good. So here we have price respecting this supply zone and then giving us a change of character right here. All right, here we have a change of character on the daily time frame when the price respected this supply zone after the break of this structure. Anytime price breaks a structure, it creates a supply zone or an area of reversal, and the price goes back and then fills the rest of the orders before it continues to the downside and then finds the higher time frame realignment. All right, so here we can see we have a change of character once the price hit this supply zone, and then price went back once it broke the structure to fill the rest of these orders, which is an imbalance. Okay, you can see there was an imbalance, but also you can see there's a shadow that's sitting here. So this shadow is basically a supply zone on the daily time frame. And how we know this is we can go to the lower time frame and refine this, and here you know that we have an area of a supply that needs to be mitigated, or there's an order that's sitting here that the price has to come back and fill the rest of these orders after the break of this structure. All right, great. So we can see that on the daily time frame, this is what's happening right now, but we have this in our mind that we know price is going towards this direction so that it can continue and realign with the higher time frame uptrend. But now we are in the short-term downtrend. All right, now let me go to the 4-hour time frame. All right, so when I go to the 4-hour time frame, clearly we can see that we have a change of character right here, price respecting this supply zone and then continuing to the downside. So now we are trading from this area to this area here. So this entire area will be just one. So this high led to this lower low, breaking this structure. Now price is trading here, between here and here. So now price is consolidating. All right, price is basically consolidating. All right, what we need is price coming back all the way down here, giving us that change of character, and then continue to the upside with realigning with the higher time frame, or price coming back over here, giving us that change of character on the lower time frame and then realigning with the higher time frame uptrend. All right, good. So here we have a change of character, and now we have the price creating short-term lower highs, lower lows. You can see price creating high, low, lower high, lower low, lower high, lower low, and then giving us a short-term change of character. All right, giving us a short-term change of character. All right, because price is attracting to maybe go mitigate the rest of this area this week here. So you can see from this high of the week and then this high of the week, there is a reversal zone, which is a supply zone that price has to continue mitigating. All right, but we know that on the higher time frame we are in an uptrend. What we need now is price doing this, breaking this structure, going back, mitigating some type of supply zone, and then continuing breaking this structure again, and then mitigating some type of supply zone here again until the price comes back to a higher time frame demand zone from here or somewhere here. All right, so guys, this is what's going on with US30. Very easy, very precise, and I try to make things as easy as I can. I hope you learned something from this video. If you haven't subscribed, please go ahead and subscribe. Also, if you want to upgrade your knowledge, I have an ebook that contains about 119 pages that will teach you everything that has to do with smart money trading. Only $39.99, worth your money. I guarantee you that you're going to be learning a lot from that ebook. You know, it's good to have it in your possession. So if you want to get that ebook, the link is going to be in the description. Your boy again, peace and love.